So Bitcoin continues to dance around the key level from 2017, right? And that's kind of been the level we've been around since June, which is absolutely remarkable that it stayed that long. So you can see very clearly, like, if I zoom out on this chart, here's your 2017 high, and look at how you've just been chopping around this level. Here's a downsloping trend line that's resistance. You can see it hit right here, and then we kissed it right there as well. Now we are inching below that line. Yeah. So at some point, this area is going to give way, and you're going to see price action really tumble.
Popular technical analyst Gareth Soloway has 2 price predictions for Bitcoin before year end. For his best case scenario, he predicts that the leading crypto asset will take a plunge to $13,000 or $12,000. But he believes it could go even lower to $3,500 as the markets continue to reel from the impact of the macro environment. Over the past weeks, the Bitcoin prices have been chopping around 2017 highs with no true move to the upside or otherwise. On Monday, the king crypto asset slid below $19,000, hitting a record low of $18,430. However, the bulls were able to save the day and prevented it from sliding to June lows. Regardless, Soloway is convinced that we are right on track to incredible lows by year-end. In a recent interview, the technical analyst doubles down on his infamous short-term price prediction for Bitcoin, pointing out 3 reasons why he is so certain. He also speaks about gold, the stock market, and the possibility of a Fed pivot before the year ends. Please watch, like, and share this video as we bring you this important market update from Gareth Soloway. Also, ensure you hit the like button, subscribe to the channel, and drop your comments and observations in the comments section below. Thanks, and enjoy the video.
You know, for me, I'm looking at the charts, and it's a matter of when it goes to 12 to 13,000 for me. It's not if. So the question is if by the end of the year, which is the tougher kind of, the tougher thing to happen in a very confined time frame. So I still think that's the case. I mean, there's definitely for me a 30% chance that by end of year it doesn't hit 12, 13,000. Maybe the low is 17.5 like it was, or maybe 15 like you were saying.
So you're looking at that, and you're still looking at 12 to 10K.
Yeah, for me, that's the target. That's the first target, right? So you're looking down to around here. The reason you get that level, you can see this pivot high right here from the mid cycle period. That's going to be a ton of support, and that's right around 13 to 12,000. So that's where I'm getting that technical level. It's also, I believe, a measured move where if you look at this, right? So let's do another trend line here. If we look at this move down here, this was pretty much a straight line. And then if you look at this move, and then basically you do another one like that, it takes you right down towards that percentage-wise level as well. And then lastly, the one thing you could point out too with the 12 to 13,000 level, it's the usual correction or bear market lows, right? 85% on Bitcoin. So there's another reason why that should be a little bit of support. You're going to get a lot of investors that are going to say, holy cow, we're down 80 to 85%. This must be the bottom. That probably means it's not, but at least it's a bounce level.
But that would mean it will either go even a lot lower than that, or it should stop higher.
No, you're right. You're right. So to me, I think you're going to get a bounce there just because that's the nature of charts where you're going to get some buyers to come in. But I have it penciled in. That's my high-end target. My low-end target, unfortunately, is all the way down to about 3,500, which would be your worst case scenario. So like if we repeat the dot-com collapse and everything like that, then you're looking at that 3,500, which would mirror the percentage drop that Amazon dropped when it collapsed in 2000 from the dot-com collapse.
In addition to raising interest rates at the fastest pace in a single year since the 80s, the Federal Reserve is also rolling assets off its balance sheet to bring down inflation. Over the past 3 months, it has been unrolling its massive $9 trillion bond portfolio by $47.5 billion per month. In September, the central bank kicked up the process a notch, doubling the Treasury and mortgage-backed securities it rolls off to $95 billion per month. As a result, the dollar has been gaining value compared to other currencies. In his interview, Soloway explains that the strong dollar has been influencing the markets, pulling down asset prices from commodities to crypto and stocks. But the analyst adds that a Fed pivot may soon be underway, in which case we would see a significant bounce in asset prices.
Today's episode is sponsored by iTrustCapital, the #1 crypto IRA platform in America. We allow you to invest in your favorite cryptocurrencies without worrying about taxes. That's right, iTrustCapital allows you to buy and sell your favorite cryptocurrencies completely tax-free. That means if you invest $10,000 into Cardano and it grows to $100,000, all of your profits are tax-free. Why is it tax-free? We took the existing retirement account industry and flipped it on its head. Instead of boring stocks and bonds, you can invest in crypto. How is it secured? Through Coinbase Custody, one of the leading cold storage providers with a $320 million insurance policy to protect against theft, hacks, and loss of funds. Roll over your existing retirement account, or even start a new one from scratch. Questions? Schedule a free call with one of our crypto retirement account specialists, and they can help you discuss your options. Start your crypto IRA today and retire early, only at iTrustCapital. Click the link in the description to open a free account now.
You basically look at the dollar chart, and the dollar is everything right now. So the dollar is all tied to the Federal Reserve. So the more aggressive the Fed tightens monetary policy, whether it's a 75 basis point hike, they're doing QT right now, which is quantitative tightening, which is sucking money out of the system. It's basically meaning there's less dollars in the system. Therefore, price of dollars goes up, right? So it's a supply demand analysis, basically. And that's why the dollar's been so strong. The market hates that, right? The market has been addicted to free money, cheap money for so long. And so it's inevitably you have to see these asset prices come down because there's less money in the system to purchase these assets. Yeah, so gold continues to kind of hover right around this support area here. So we can see right around this area, there's a lot of support. If we can draw a trend line, you kind of hit it here, 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 and all the way over. Now, the key is on gold is that a lot of people bash gold, but honestly, gold has been like, if I think anyone could go back and redo 2022, they would say, if you had to pick an asset, where would you put all your money? And the answer would probably be gold, because it's only down 5% or so on the year versus the S&P, Bitcoin, and all these other assets. So the fact is it's down because the dollar has been so strong. And I think this is important for investors to understand. If you were in Europe and you were trading with euros, if you're in Japan and you're trading with yen, then gold is actually positive or nearly positive on the year, but it's just because it's in dollars that it has taken a hit because the dollar has gotten so strong. The other thing to keep in mind is the dollar rallied 15% this year, right? Gold is only down 5 or 6%. To me, that's a strong standout. Because again, if you think about it, if someone told me at the beginning of the year the dollar was going to be up 15%, I would have said, okay, well, gold should be down 15% then, right? That's the equivalent. It should move 1-for-1 inverse to the dollar. And the fact that it's only down 5-6% to me is a relative strong indicator. So I'm already in gold. But I'm in at a point where I would gladly add to it, as I'm a believer in it. I'm a believer that the Fed eventually goes back to lenient monetary policy when the economy gets bad enough. And so, for me, if it breaks here, you're probably headed to 1550 or so, this next pivot point, and that would be the next big area of support on a technical basis.
If Bitcoin falls to $3,500, as Gareth Soloway has predicted, that would be a 95% decline from its November peak. Even Soloway's best-case scenario is around 80% decline from the asset's all-time high. What do you think is the probability that we drop to such levels? Let us know what you think in the comments section below. Also, be sure you hit the like button, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching our videos.